Dude, the Didi news is just like mind blown, unbelievable.
Yeah.
They've only been public for 10 weeks.
Yeah.
They just sold shares to the public and they're already getting taken.
Talk about an escalation.
Not taken private, right? I guess nationalized. That will be very interesting to follow. That's a little bit of escalation there. I have a chart that goes right back to the jobs picture. And this is something I saw on the Daybreak newsletter today. It's from the NFIB, the National Federation of Independent Business, a small business organization in the U.S. And it shows more employers have job openings than ever before. I mean, the chart goes back, for those listening on radio, to the 80s, but it just is up and to the right over the last few years. More job openings than ever before, and more employers are offering more money to get employees in the door than ever before. So the situation, I think, in terms of jobs, really demands the question, why are we still looking at $120 billion of asset purchases a month? Joining us to talk about this and more is Thanos Papasavas, Abp Invest CIO and founder. Thanos, in this situation, is it really necessary for the Fed to be stimulating the economy so much?
Powell has been very cautious. In our view, we should be shifting into a more hawkish, slightly tighter environment in order to leave some sort of a dry powder for should the situation worsen. But I think he is extremely cautious. He does not want to risk a second correction, and as a result, he's continuing with the same policies. To my surprise, however, the bond market seems to agree with him. He has managed to convince the bond market and is aligned with them. Otherwise, the 10 years would not be at 130. So we are negative on the 10 years. We think that the 10-year yield should be higher. We expect inflation to come through, and we do not expect it to be transitory. But I can understand what he's saying and why he's doing it. I do not agree with it, but I can see it.
Can I ask about the dollar? We were talking about you earlier in the program, saying that you've been ranked one of the best currency strategists in the world on a number of occasions. The U.S. dollar isn't at its highest point right now. I'm looking at the Bloomberg Dollar Index, but it's not. I mean, it's much higher than it was in the first decade of this century and at the end of the last century. Given that Joe Manchin is worried about $28 trillion in debt, and the Democrats want to spend another $3.5 trillion, why do we see such relative strength for the dollar?
The dollar and the U.S. are, I think, globally the only economy which could do that. We don't need to bring the MMT into the discussion, but if MMT were to be able to take action, it would only work within the U.S. because it is the common denominator in terms of the global currencies. And it's got that privilege, if you like, which it can use. So we are gradually shifting towards a sort of a more neutral dollar policy. We closed our positive euro in June. We're looking for opportunity to go negative the euro because I do believe, as I mentioned earlier, the interest rate differentials and the economic differentials will be favoring the US economy.
Thanos, good morning. Let me ask you actually about China a little bit. So moments ago, we found out that Beijing's city government, so this is at a local level, actually could take Didi under state control. Now, this is a huge escalation because just weeks ago and days ago, they were asking them to rectify some of the things that they asked by December. So if this is part and parcel of the new China, of the China that we've been talking about for the last 3 to 4 weeks, what does it mean as an investor looking into buying China? Are you invested in China?
I think we are seeing structural shifts. This is a significant development which is taking place under President Xi. I think he's trying to achieve two objectives. Objective number one is to avoid the social inequalities, income inequalities, which have happened within the West and some of the excesses which dealt with the global financial crisis, the Wall Street protest movement and so on. He's trying to bring that balance, going back a little bit to the ideals of the communist ethos. I'm not suggesting that he's going to go back to the Mao develops, not at all, but he is adjusting, he's shifting to the left. So that's priority number one. Priority number two, I think, is also potentially, if you like, a cynical way of looking at it, but I think it's also to avoid an existential threat from an outsider of the Chinese Communist Party who manages to raise populace and also the financial backing to challenge that. So it's
Interesting.
basically hitting two stones with two birds with one stone.
Thanos, Goldman Sachs put out a note overnight that basically said crackdowns on different sectors within China on the micro level will just mean looser monetary and fiscal policy on the macro level in order to offset any kind of slowdown in the economy that may stem from the crackdown. Do you think concerns about China's slowdown have been overblown?
I do. I think that there's two parts. Going back to what Francine was mentioning, these are structural socio-political impacts. On the other hand, however, I do believe that the policymakers will continue to monitor or to have a sort of a Washington consensus, keeping orthodox policy both on a monetary and a fiscal point of view. They have not used as much facilities as the West. There's a lot at their disposal, and on any signs that weakness is taking place, they're just going to throw money in, because at the end of the day, they need to maintain economic growth to provide social cohesion, again, for the party to be in power.
Thanos, thanks so much. Thanos Papasavas there, Chief Investment Officer at Abp Invest. Now, moments ago,